welcome back. Well, oil is a major one. We're talking about commodities this morning, but prices reclaimed some ground on Thursday after tumbling to a 6-month low in the previous session. But investors remain concerned about sluggish demand and economic slowdowns in the United States and China. Brent crude futures rose this morning. Last night, I tell you, it was down to, I think, less than 70. Very scary place for a country like Nigeria. But this morning, it rose 38 cents. That's about 0.5% to $74.68 a barrel, while U.S. West Texas Intermediate crude also went up 42 cents at about 0.6% to less than 70, that's $69.80. Nigeria, of course, is more concerned about the Brent. That's where we're connected to. But some of the bearishness was also as a result of higher product fuel inventories, gasoline stocks, which rose by 5.4 million barrels in the week to 223.6 million barrels, according to the EIA, far exceeding expectations for a 1 million barrel build. For the first time in a year, the market structure for Brent contracts switched to trade in contango, with contracts for near-term delivery cheaper than 6 months later. WTI contracts have also switched to trade in contango over 6 months. Meanwhile, Russian President Vladimir Putin and Saudi Arabia Crown Prince Mohammed bin Salman met to discuss further oil price cooperation. That was yesterday. Mr. Putin was in the UAE. Members of the OPEC Plus, which may threaten the market's confidence in the impact of output cuts. Kuwait and Algeria also reaffirmed their support and commitment to the voluntary cuts, which should boost prices for countries like Nigeria, or to the detriment of some countries like Nigeria. But let's talk about these and its implication for the second time this week. Fumi Adibowale, Senior Analyst of Financial Derivatives Company, joins us virtually. Hi, Fumi, good morning. Good to have you again on the program.
Good morning. Thank you for having me.
Good to have you. So, Fumi, this issue of oil prices, when compared to our benchmark price for the Appropriation Bill of 2024, really gets really scary. Yesterday, we saw that price really go down. I think now it's lower than our benchmark price, and we're seeing more agreements and commitment right there, even though it's for cut, and we hope it will boost price so that at least it will be on the level of the benchmark, which is risky still.
Yes, so prices are actually down, though it increased slightly this morning to about $74.6 per barrel, but it is still 4.1% lower than our benchmark, oil benchmark for 2024. And this is the concern. Though when OPEC Plus agreed to reduce production by 2.2 million barrels per day, it was expected that it was going to have a significant impact on prices. However, we saw that investors and the markets were not really motivated. The concerns for the weak demand concerns still outweighed the potential decline, reduction in supply, and it is really disturbing for Nigeria, considering the fact that about 90% of the projected revenue for 2024 is from oil. So it's a concern. First of all, our production quota has been reduced to 1.58 million, and now our prices are lower, meaning that Nigeria is going to lose about $20 million per day. So it is something that we should worry about, and because it's going to increase the financial body of the government. Currently, the government is in need of revenues, and the president has been looking around to see both the domestic market and foreign market to see where revenues can be generated from. So now that oil revenues are likely to drop further, it's going to increase the financial burden on the government, and which means that we're definitely going to borrow more. And currently, about 98% of our revenue is used to service debts. This is really disturbing at this point in time, because other productive resources or productive projects that should have been invested on will be affected. But the good news is that the landing cost of petrol will decline, and meaning that if at all there is subsidy payments, we are going to see subsidy payments reduce, but the fiscal consolidation objective of the government might not be achieved. So that is really, really disturbing at this point in time.
For me, I like the way you said, if at all there's subsidy payment, because this issue of subsidy payment is obviously not clear enough to a whole lot of us. But I mean, even before we go there, I don't know if you saw the beginning of the program. Yesterday, we had Mr. Kaboize from the Budget Office on our sister program, Politics Today, and he assured us that, I mean, at this rate, at the rate that we're going so far, we would do well when it comes to revenue, and there should be no fears. I don't know how you would react to that.
Well, I would say that it's just about what is happening currently. It's about the reality. It's not about whether we'll do well or not. What is the market saying? What are oil prices saying? What is production saying? Because that is what will actually add up to know what revenue is and how it's going to be used to fund the budget. So it's about market reality, except the fact that, well, let's hope that going forward, oil prices will increase further. If that happens, then we should be rest assured that revenue will increase. But at the moment, prices are down, our quota is being reduced, so revenue is a challenge to me as far as I'm concerned.
Yeah, but, we have that meeting, Russia's determination, Mr. Putin committing or cooperating with other oil-producing countries, Algeria also expressing commitment, to stick to the voluntary cut. Do you think that can do us some good?
Well, with the agreement, I expect that oil prices will increase, but weak demand is still a concern. If production is being reduced and demand falls further, because it's not about the forces of demand and supply. So if production reduces and demand increases, then oil prices will increase. But if we expect demand to remain weak and probably reduce further, then it's possible that prices will still, if at all it will increase, it will still be within the range of $70 to $80 per barrel. I don't think it's going to increase to the levels we've seen in the last, I think, 2-3 months, where oil price crossed the $90 per barrel threshold. So it's actually dependent on how weak, how robust demand is likely to be. But currently, demand is still weak, and that is actually that's undermining the impact of the supply cuts that is expected in 2024.
Okay, well, I think we've seen a 0.14% increase in oil production since President Tinubu took over. So we hope we will see more increase, when it comes to production, so that even if the price is not so high, perhaps the volume would help Nigeria to buffer the difference. Or what do you think?
Exactly. Nigeria is more sensitive to oil production than price. And in October, we saw oil price increase marginally. But the challenge is that the last time Nigeria produced up to 1.58 million barrels per day was in June. I think January 2020. So what efforts are in place? Though there have been increased efforts towards curbing oil theft, reducing pipeline vandalism and all. So if efforts are actually increased, and there is also increased investment in the oil sector, it's very likely that Nigeria's oil production will increase. But what the concern is, are we going to produce up to that level, up to 1.58 million barrels per day, or even higher? So if that happens, definitely we'll see oil revenue increase, because the economy is more sensitive to oil production than even price. So if our production should increase, definitely oil revenues will increase.
Okay, let's leave oil for a bit and look at domestic commodities. The festive season is coming. Demand is supposed to increase, even though I think in the last 2 years since COVID, we've seen subdued demand of commodities, even during the festive period. What's price looking like? What's demand looking like for this period?
Yeah, so like I mentioned, during COVID and since COVID, we've seen demand reduce. But there was a pickup, I think, in early 2020 before the reform. Now with the reform, oil prices are up, exchange rate depreciation is also reducing the purchasing power of consumers, and that is actually reducing demand. But since December is festive season, we expect demand to increase. However, it might not get to the pre-COVID levels, because consumers are actually struggling out there. I'm sure a bag of rice is over 50,000 naira per bag. So which is that even higher than your minimum wage. So it's all about affordability. We expect demand to increase during this festive period, but we are unlikely to see that boost in demand that we would have expected before COVID, because an average Nigerian is actually struggling at this point in time.
Yeah, okay, thank you so much. Any other commodities you look at? I think cocoa, corn are in the news at this time. Anything
Yeah,
spectacular happening?
yeah, thank you. So the price of corn is down to a 3-year low, and Nigeria actually imports corn. Corn is one of the major imports into the Nigerian economy. So we expect that to actually reduce the import bill of cocoa. But we have also seen that domestically, the price of a ton of corn is about 580,000 naira, which is like an increase of 100%. So that is because even if the global price is falling, the exchange rate impact is still being felt. And corn accounts for about 70% of the input used for animal feed. So whatever happens to the price of corn will definitely affect the byproduct. So for Nigeria to actually take advantage of lower prices in the global market, I think the exchange rate issues has to be addressed. So far, Nigeria is still battling with currency pressures. Then the impact of lower prices in the global markets might not be really felt in the Nigerian economy, and that's going to affect corn farmers and other companies that rely on corn as an input for their product. But for cocoa, we are seeing the price of cocoa increase, and that is good for Nigeria because cocoa is the largest non-oil export for Nigeria. So an increase in price means that there will be increase in revenues, which is good, which is actually good for the country. It's also good for farmers. So we are seeing corn drop on one hand, but there's also an increase in the price of cocoa, which is good for the economy.
Yeah, I wish we could automatically just increase our production of cocoa, and to make up for some of the loopholes that we have. But thank you so much for sharing your thoughts with us this morning. Fumi Adebowale, Senior Analyst with Financial Derivatives Company.